Welcome to part 2 of our Investor FAQ series. In the first video, we covered the process, how to join, how the investment works, and what an SPV is. If you haven't seen that yet, we recommend starting there. In this video, we're answering 8 questions about the platform itself, the AI, the commitments, and what your experience as a member actually looks like. Let's dive in. Question 1. How does the AI coaching actually work? This is one of the things that makes Lucent Invest truly different. When you join, you get access to Lucy, our AI coaching agent. Lucy lives in your personal dashboard, and she's available to you anytime, day or night. Lucy isn't a generic chatbot. She knows your profile, your experience level, your risk appetite, your sector interests. So when you ask her a question, she doesn't give you a textbook answer. She gives you an answer that's relevant to you. If you're unsure what a convertible note is, she'll explain it in plain language. If you want to understand how to evaluate a pitch deck, she'll walk you through it step by step. If you're nervous about your first investment, she'll help you think through the decision. Think of Lucy as your personal investing mentor, one that's always available, endlessly patient, and completely tailored to where you are in your journey. Question 2. What's the minimum commitment or obligation? None. Membership in Lucent Invest comes with zero obligation to invest. You can join, explore the platform, talk to Lucy, learn about startup investing, and never put a single dollar into a deal. That's completely fine. When a deal is presented to you, there's no deadline pressure, no minimum check size imposed by us, and no penalty for passing. The investment terms, including any minimum amounts, are set by the startup and the deal structure, not by Lucent Invest. We believe the best investment decisions come from confidence, not pressure. Take your time, learn first, invest when you're ready. Question 3. Do I need prior investing experience to join? Not at all. In fact, some of our most engaged members started with zero startup investing experience. They had capital, curiosity, and the willingness to learn. That's all you need. Our entire platform is built around education first. The onboarding process meets you where you are. Lucy adapts to your knowledge level. And the content we produce, like this video series, is designed to take you from complete beginner to confident investor. Of course, if you do have experience, that's great too. The system adapts. Experienced investors get a different depth of coaching, more advanced resources, and faster access to deal flow. But you absolutely don't need to be an expert to start. Question 4. Can I diversify my investments across multiple startups? Yes, and we strongly encourage it. Diversification is one of the most important principles in startup investing. Most startups fail. That's the reality. But a well-diversified portfolio increases your chances of being in the one that succeeds. At Lucent Invest, each deal is structured through its own separate SPV. That means you can invest in multiple startups over time, each through its own isolated vehicle. Your exposure to any single company is contained, and your portfolio grows as new opportunities are presented. We'll never rush you into diversifying, but as deals come through that match your profile, you'll have the option to build a portfolio gradually, across different sectors, stages, and geographies. Question 5. How long until I see returns? This is one of the most important questions, and we want to be completely honest with you. Startup investing is a long game. Returns typically come through an exit event, an acquisition, an IPO, or a secondary sale. These events usually take anywhere from 3 to 10 years, depending on the company and the market. There are no guaranteed returns, there are no fixed timelines, and there's no way to predict which startup will be the one that delivers a significant return. This is why education, due diligence, and diversification matter so much. What we can promise is transparency. You'll always know where your investments stand, and Lucy is there to help you set realistic expectations from the very beginning. Question 6. What happens after I invest? Do I get updates? Yes, after you invest, you're not left in the dark. As a partner in the SPV, you're entitled to updates on the startup's progress. How frequently those updates come depends on the startup. Some founders send monthly updates, others quarterly. Lucent Invest also stays involved. We maintain the SPV, we monitor the investment, and we communicate relevant developments to you. If there's a major milestone, a new funding round, or an exit opportunity, you'll hear about it. And as always, Lucy is available on your dashboard to help you understand any update or development. You invested with confidence, you'll stay informed with confidence too. Question 7. Is my data private and secure? Absolutely. Data privacy and security are non-negotiable for us. Your personal information, your financial data, and your conversations with Lucy are all encrypted and stored securely. We do not share your data with third parties. We do not sell your information. And we do not use your data for anything other than providing you with the best possible experience on our platform. The AI conversations during onboarding and coaching are used to build your investor profile and improve your matches. But that data stays within Lucent Invest. It's for your benefit and your benefit only. We take this seriously because trust is the foundation of everything we do. If you don't trust us with your data, you won't trust us with your investments. So we've built the platform with security at its core. Question 8. Will you be adding educational videos to your YouTube channel? Yes, in fact, we already are. Beyond this FAQ series and our introduction playlist, we're building a full library of educational content right here on our channel. We have 3 playlists in development. The first covers startup basics. What is a startup? What is venture capital? What are the stages of funding? The second is specifically for investors. How to evaluate deals, what to look for in a founder, how to build a portfolio. And the third is for founders. How to raise, how to pitch, how to approach investors the right way. Subscribe to the channel so you don't miss any of it. And if there's a topic you want us to cover, tell us in the comments. We're building this for you. That's part 2 of our investor FAQ. In the final part, we'll tackle the big questions: trust, risk, and how your money is protected. If you have questions, drop them in the comments. And if you're ready to start your journey, apply at lucentinvest.com. Lucent Invest, where ambition meets clarity.